What's up everybody, Nate here, and the stock market and investors all throughout the world have been pretty scared as of lately, and no, it's not because they're just trying to get into the spirit of Halloween a little early. It's largely because of one of the biggest investment banks in Europe, Credit Suisse. Credit Suisse is kind of scaring the market right now because of the way that they're managing their company, and the way that they're starting to invest is mirroring something that one of the largest US banks did back during the 2007-2008 recession and global financial crash. That's right now people are comparing the Credit Suisse situation to the Lehman Brothers collapse, where they lost hundreds of billions of dollars in the blink of an eye, and that is seen as the catalyst to the great financial crash and ultimate great recession just over 10 years ago. So today I want to talk about exactly what is going on with Credit Suisse. Is this another Lehman Brothers situation, or is everyone just kind of freaking out for no reason? All right, so Credit Suisse is an investment bank. So they essentially work with investors on a large scale in corporations in order to grow other companies and debt all throughout Europe. These investment companies are not special. There is tons of them all throughout the world, and they essentially act as the middleman between somebody who wants to take on debt and somebody that is selling something. So that something that someone is selling could be an asset, it could be a house, it could be a bond, it could really be anything. These investment banks make their money by underwriting a lot of these loans. So they are technically the owners of these loans at the end of the day. They kind of facilitate all of the actions. Now, in case you don't know, Credit Suisse in particular is a very interesting company because they have had a ton of different scandals and a ton of different problems over the last couple of years. They've actually swapped out their CEO a couple times since 2020. They've been swapping out a lot of their board members as well, and a lot of the other higher ups in their company. So they are currently going through a massive restructuring plan. So what exactly is it that is worrying economists and investors all throughout the world? Well, it is something called a credit default swap. And right now, credit default swaps for Credit Suisse have hit an all-time high. And if you've seen The Big Short, which if you haven't, I highly recommend it, or you lived through the great financial crash of 2008, credit default swaps are kind of like a trigger word.
With something called a credit default swap.
Basically, a credit default swap is a type of insurance that somebody can get on an asset. And when we talk about credit default swaps, there's typically three parties. There's the buyer, there's the seller, and then there's the actual insurer themselves. So basically, a credit default swap works when somebody wants to sell you, let's say, a mortgage. So a bank wants to sell somebody a mortgage, but they feel like the person that's taking on the mortgage might not be able to pay that money back over the 15 or 30 year term. 15 and 30 years is a very long time. Someone could lose their job, the entire economy could crash, so the bank wants to take on some type of insurance on that actual loan. So they work with another entity for a credit default swap. Now, if the person actually forecloses or can't pay their bills anymore, the bank now is completely protected because they have insurance on that loan. So they don't really care what happens to the person that took out that loan. They're now going to get paid by the insurance company. That gives them a lot more protection when giving out money for any type of loan. I don't think the insurance company isn't working out either. They bet that the person that took out the mortgage is going to be able to pay their loan. So they ask the bank to pay them a monthly premium every single month. And if they never have to insure the person going into foreclosure on their house and can't pay their mortgage, then they make out with thousands upon thousands of dollars in interest payments every single month. Well, so now back to Credit Suisse. So Credit Suisse has a ton of money built into its portfolio with credit default swaps. They have almost $300 billion worth of credit default swaps right now. Right now, that's not really a huge deal because the bank says they have enough liquidity and enough capital to cover any of their debt if they were to go into bankruptcy or face an asset crash. And that might be true, but the same exact situation happened with Lehman Brothers all the way back in 2008. Essentially, they had so many of these credit default swaps that people and investors were starting to bet on those credit default swaps. So to kind of give you a little bit of background on what happened with the Lehman Brothers situation, well, they ran into all of their problems based on the mortgage market. So they kept investing more and more heavily into mortgage-backed securities. So when a bank gives out a mortgage, there's value there, and then that value can then be invested on because there's an actual cash amount there. So banks figured figured out that they could make even more money off of a mortgage if they start packaging these together in a mortgage-backed security and then selling them on Wall Street. Every single one of those mortgages, though, had a credit default swap linked with it because Lehman Brothers wanted to protect themselves, but the problem came up when millions of people were unable to pay their mortgages and went into foreclosures. Obviously, you had the subprime mortgage crisis and you had interest rates starting to rise because of adjustable rate mortgages. Lehman Brothers had all of this money in assets. They had over $600 billion in assets and only $400 billion in credit default swaps. And they said back then that, yeah, if anything goes down, we can sell our real estate because they had a ton invested in real estate. We can sell off some assets in order to cover all of these mortgage-backed securities if the value of them goes down, which it did when people couldn't pay their mortgage anymore. And we have a lot of other things like bonds and all of these other assets. But the issue is once all of this started to go down back in 2008, people didn't really want to buy Lehman Brothers assets anymore. So they had all of this money, but nobody to really sell it to. So they ended up going into bankruptcy. And all of the creditors and all of the insurance companies that took on all of this debt from Lehman Brothers, they didn't have $500 billion plus laying around to pay them back. So they all started to fail too. And all of these mortgage-backed securities and all of these CDSs ended up losing all of their value, meaning banks started to fail. And when banks fail, nobody can get any money anymore. And now everybody is starting to hurt. This is the big fear with what is going on with Credit Suisse because they seem to be taking on more and more assets right now, and we're not really sure how they're investing. Like I said before, by themselves, these credit default swaps are not that big of a deal, but when you start adding on more, and if your economy starts to go down, the value of all of those funds also starts to decrease. They only become a problem when there is something called a credit event. So when somebody's unable to pay their mortgage, that triggers the insurance company to pay out the bank that ended up giving out that mortgage. These insurance companies, these companies that are creating these credit default swaps, well, they're going to take the bet every single time because they hope and they can look at their numbers and predict if somebody's going to be able to pay their mortgage or not. So this is just a big payday for them because they can rake in hundreds of billions of dollars just in premiums, and they might never have to shell out any money themselves. And this is where you have to kind of look at the grand scheme of things because Credit Suisse continues to add on to their credit default swap, but the entire world right now is going into slower economic conditions. And the bottom line is Credit Suisse may end up becoming way too over leveraged with a lot of their investments, and the same thing with Lehman Brothers may end up repeating itself with Credit Suisse. Whether it's in mortgages or whether it's in equity debt for other companies, well, if those corporations, if those people are unable to pay back their debts, well, now that's going to create a credit event and the insurance companies are going to get hit hard. If those people are not able to pay their debts and the insurance company doesn't have the money to give back to Credit Suisse, well, now everything systematically fails. Obviously, that is not a guarantee. I don't want this video to come off as just one big scare tactic because at the end of the day, we don't know what's going to happen next. However, the market is really scared because it looks like Credit Suisse is taking on a bit more than it can handle with all of its other problems like restructuring in the company and all of its legal debts from some scandals over the last few years. That's why investors are predicting that something strange is happening with Credit Suisse right now, and that could ultimately lead to a bailout from the Swiss government or some other type of government. And what this is going to cause is the euro or other currencies to start having trouble too. And that is an even more serious deal considering everything else that is happening with central banks around the world. The Federal Reserve is starting to raise its interest rates, and the US dollar is the reserve currency of the world. So if any of that money by Credit Suisse is being loaned out in US dollars, well, now all of that money is getting a whole lot more expensive. The US dollar is extremely strong right now, and the reason it's strong is because the interest rates for the US are so high. It's really, really difficult to come across US dollars, unlike how it was over the last couple of years with really low interest rates. Anybody that wanted a loan, whether it was a bank or whether it was a person, could easily get one because interest rates were low. The Federal Reserve was printing money like crazy. Now, if any of these banks overseas or in the United States want to send out money, they're going to have a much harder time doing that, which leads Credit Suisse to take on more credit default swaps. If they are getting risky with their assets and they're not well diversified, meaning if they're only investing in one thing and that one thing starts to fail, now the entire bank fails and all of their insurers and all of their assets. And you have to look at the micro situations as well, because all of these businesses, these global companies that are doing business, well, they are going to have a lot lower of profits if they're dealing in US dollars, because the US dollar is really strong and these companies can't really loan out, or they're not going to get as much money back, which means they're going to have lower profits and they're going to have a little bit of a harder time paying all of their bills. And this same exact situation is happening in the United States, because the cost to actually export goods and services goes up because the United States dollar is so strong, which means importing costs of all US goods also starts to go up, and these businesses might not have the capital in order to pay their bills. So is this a situation like we saw with Lehman Brothers? Well, right now it's way too early to call. I will say over the next couple of weeks, Credit Suisse actually releases their earnings report, and that will help us to figure out a little bit more of what they're invested in and how much risk they're actually taking on. We also don't know what's going to happen with central banks. If central banks continue to raise interest rates very aggressively for the next year and a half or so, well, then that could mean a lot more government stimulus in Europe, and it could also mean that a lot of businesses aren't getting the capital that they need in order to survive, which means they're going to have a lot harder of a time paying their bills, i.e. paying that money that they use to grow and take debt from Credit Suisse. Obviously, the opposite could happen. The Federal Reserve might start lowering their interest rates, or they might keep them at the exact same level, and that's going to cause some pain, but it might not end up causing a global economic slowdown or recession. We just don't know yet. And obviously, nobody knows what direction inflation is going to take next. Right now, it's pretty stable and it might start to come down. And if it does that, then that could actually mean people, if Credit Suisse has a lot of their debt in mortgages or other consumer products, then that could mean people have a lot easier of a time paying off those things, or again, pumping money into the economy, which is exactly what these businesses need. We just don't know yet. So as of right now, I would say the chances of Credit Suisse actually going into a Lehman Brothers style collapse is pretty low. But again, that could change on a dime, and it's important to note that we have seen this in history before. I'm just hoping that this time we have a little bit different of an outcome. But now I want to hear from you on this issue. What do you think about Credit Suisse? Do you think that they're going to collapse like the Lehman Brothers did all the way back in 2008? Or do you think that this is just a scare tactic on Wall Street right now, and there really is no problem with Credit Suisse or any of these major banks? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.